Hey everyone,
Yeah,
welcome back to another episode of the 2DS podcast. So Ruben and I, we are going to walk you through a DCF of a very popular stock, AMD. So Ruben, do you want to get us started?
yeah, sure. So as we all know that AMD is it's sort of like one of the biggest semicon players in terms of technology,
Yeah,
and then these guys do both graphics card as well as CPUs, computer processing. So and recently they acquired the Xilinx. So from now on, these guys will also be be the world leader in doing the FPGA, field programming gate array chips. So this company sort of has become a behemoth or whatever you call. So it's the silicon tech powerhouse basically. So we actually took the last quarter financial results, and then the year 2021 full results, and then we took the numbers from here, and then we are using this for our discounted cash flow analysis. So this thing doesn't reflect the valuation changes that has occurred during the Xilinx acquisition. So this information is available in their website. So you just go to AMD investor relationship, and then you can just straightforward find this out. So once we go here, so this got like all the needed information, from all three financial statements. So we actually focus on the outlook. The outlook is so you just take their 2021 the full year results. So which is actually 16.4B. So and then they are expect to grow that to 21B for the next year, the upcoming year. So and then we also take their cash flow metrics as well as the debt, and then the growth projections. The number we take is always depends on what these people are estimating over here, and then we'll also do what is expected of based on the current value that the market
yeah,
is factoring for this one.
yeah.
Yeah. So let's go to the presentation, Ravi.
Let's jump in.
Yeah. So just give me a second.
Okay.
Yeah. So okay, so we actually want to start off from what we think is the estimated growth rate based on the last financial year performance, as well as what is projected for the future.
Ruben,
So
can you zoom in a little bit? Your screen is a bit small.
just give me a second.
Yeah, sure. Yeah, this is fine. Yeah, this is perfect.
Yeah. So as usual, we have the growth rate for the first 5 years and then the following 5 years. So we estimate that AMD grows for 30% at least for the first 5 years, and then 20% from then on. And then we are factoring in a discount rate of around 10% because what they're selling are silicon chips, which actually expected to be adjusted to inflation rate. So we have a bit lesser discount rate. And then these people, what they're doing is they're just not another software business. So they are into core silicon, which is the backbone of pretty much all thing that's technology. So we give a higher multiples for their free cash flow. And then the 1 year, the first year free cash flow, which we took from their investor reports, so which is 3.2 billion. And then also the cash in hand, the cash and cash equivalent, which is 2.5B. So, and then we forecast for first 5 years using this growth rate, and then for the following 5 years using this one, which is actually 20%. So after doing it, the present value comes out to be 284 billion. So that is for the multiple. Okay, the present value of the multiple, and then the present value of the future cash flows, basically the business valuation, excluding the cash in hand, is $360 billion. Then if you add the cash in hand, it comes around $363 billion, the equity. And then the shares outstanding is 1.22 billion. So we divide that and then we get a share price of $297 per share price. So which is actually like crazy, because the current share price is around $110, and then we are getting this at a discount of 63%. So this is one of the most undervalued stock, right? Based on the DCF that we have done so far. We did this for Facebook. We did this for a few other companies. This is the most undervalued company, for this decent growth rate. So now, as we usually do, we actually plug in the growth rate numbers to make sense for the current share price,
to see
which
what
is
the
around.
market price is baking in, basically.
Yes. And then if we look into this, so we actually did this before the call. So we just plug in the numbers. So we expect the market expect the cash flow to grow by 15% for the next 5 years, and then the following 5 years 10%. Then it comes to around $115, which is still lower than the current share price. So what we see is, it's pretty much undervalued. So we know that the semicon business is always cyclical, so there will be ups and downs. But this level of undervaluation is pretty crazy compared to what we saw for Nvidia. So that's it. So our assumption or our assessment is, the AMD is gravely undervalued. So we hope that market prices in what it's actually worth, and then bring the stocks to the heights that it actually truly deserves. So we just do a conservative number, just go 25 and then 20. So at least $200, that's what we are looking for, but for these two, just 25, 20, it's $246 per share price. So we at least want $200 for this, that's what we think it's actually worth, based on the numbers that's been thrown around. So Ravi, you have anything to add on?
No, nothing else. It's done perfectly.
What do you think about AMD's valuation then?
I think, I'm very comfortable buying at these prices, because as you can see, even with these conservative numbers plugged in, it's trading at a 50% discount to it's the fair value that we calculated, which is $246. And AMD is a strong company with secular growth ahead of it. So why not? I think
so. We have a buy rating of the stock.
I think both of us agree. And I think I'm interested in buying this as well as Facebook at the current prices.
No, the Facebook is still, so that's another topic. So we just keep this for AMD.
All right. Well, thanks everyone for tuning in.
Thank you.
If you want us to value other companies this way and have a discussion, please leave your comments below. And as usual, invest safely. Have a great weekend ahead. Take care. Bye.
Bye.